Welcome traders. Today I'm going to teach you one of the easiest strategies you will ever learn, called the Rolling VWAP AOI, also known as Area of Interest Strategy. We will be covering the following: what normal VWAP is, what rolling VWAP is, why would you use rolling VWAP, and a super easy trading strategy using the rolling VWAP. If you aren't interested in learning how VWAP or rolling VWAP is calculated, then you can skip ahead to the strategy timestamp in the description. Now, let's first go over what VWAP is. VWAP stands for Volume Weighted Average Price. This is found using a mathematical calculation, factoring in the volume to achieve a more meaningful average price line. We calculate this value using the following formula. VWAP equals the cumulative typical price times the volume, divided by the cumulative volume. Typical price is calculated by adding the high price plus the low price plus the closing price and dividing them all by 3. The cumulative volume equals the total trades since the trading session has opened. Something important to note is that VWAP resets at the open of every new trading day, disregarding the volume and price from the prior trading day. Now, let's go over the rolling VWAP. It is exactly the same as standard VWAP, except for the resetting aspect. So effectively, it's as the name suggests. It's a VWAP that rolls over into each new trading day without resetting. Rather than resetting, rolling VWAP takes into account the last 24 hours or whatever other time frame you specify in your indicator settings. This means you don't have to suddenly lose all the previous day's data if you trade right at market open the next day and have a different, potentially more effective VWAP line. Here's an image of what normal VWAP looks like. Now, let's take a look at what rolling VWAP looks like. And finally, let's put both on the chart at the same time and compare what this looks like over a time period of 3 days. This demonstrates the smooth rolling effect VWAP has over the original version. Now, let's talk about why you would want to use this. One of the most obvious answers would be if you are trading close to the market open, right after normal VWAP is reset. A freshly reset VWAP would not be very helpful to you, but with a rolled over VWAP that didn't reset to the opening price of the new session, you have that legacy data for your VWAP line and can utilize it for trades. Another potential reason is that you want to have a volume weighted average price over a larger time frame. Suddenly, now you can see what the volume weighted average price is relative to higher time frames such as the 1 hour or the 4 hour. This can be extremely useful to trade trends on higher time frames while factoring in the volume into the moving average. Now that we've covered each type of VWAP and how they work, let's talk about a super simple method of trading using this tool. Let's first start by setting up our chart with the indicators. For those that are not familiar with this charting platform, I'm showing you this on a platform called TradingView. First, let's go to indicators and search for VWAP. Click this one called Volume Weighted Average Price. You will want to select this one in the technical section. Now search for rolling VWAP. You will want to select this one created by TradingView in the community section. And lastly, an optional indicator that I like to add is the no gaps candles indicator in the community section by this name that starts with an E. Now that we have the indicators, let's set everything up. So first, let's start with the normal VWAP. So what you're going to do is you're going to go up here and you're going to select the settings for the VWAP. And first, let's go into the inputs. So first, what I'm going to want you to do is I'm going to want you to unselect this bands multiplier number 1. Boom. So now all we have is the normal VWAP line. Okay. So now that we got rid of the bands, there's nothing else that we need to do. So now we can press OK. So now we have our normal VWAP and that's all set up. Now let's go into rolling VWAP. So inside of rolling VWAP, here's where you can do a multitude of different things. So if you just want to have a normal line like so, like this background has, just like normal VWAP, then keep it like this. But what I like to do personally, and this is totally preference, is you can play with the inputs, and I like to go with the following. I like to do 0.1 for bands multiplier 1. I like to do 0.2 for bands multiplier 3 and 0.3 for bands multiplier 3. Okay? So now what you're going to do, if you want to set it up like I do, is I like to get rid of these bands, like where it has the straight up line. And I also like to get rid of the rolling VWAP line. That's a personal preference. It's totally up to you. And then what I like to do is I like to select different colors of blue. So I like to do this with about 10% opacity. And then I'll select the next color of blue with 10% opacity. And then I'll select the next color of blue with 10% opacity. So now what you have here is now you have this like cloud of where the rolling VWAP is, and you also have the normal VWAP. So these are the settings that I would use when you use this easy to learn strategy. And just for general reference, the no gaps candles, you don't need to change anything in this. Basically, all this does is if you turn it on and off, you'll notice that like here is a market open close where there's like a gap. Basically, when you turn this on, it basically just makes the body open right where the last candle closed so that the price action looks smoother. So it doesn't actually do anything besides make the candles more visually pleasing, and that's a totally optional personal preference thing. Now, basically the general gist of what this strategy is it's super simple. All you're going to do is you're going to trade around 9:30 to, I don't know, maybe like 1 p.m. Eastern time. So what that looks like is when you look at today, Tuesday, March 4th, 2025, and you look around 9:30, you see you have this rolling VWAP right here because it's the cloud, and you have the normal VWAP. So basically what I'm looking for is for price to kind of be like hugging either above or below both rolling and normal VWAP. So as you can see right here, we're just barely kind of below the rolling VWAP, but we're definitely below the VWAP. So what I would look for, generally speaking, is I would look for shorts when you're under both, but like really close. So meaning we would not take a trade. We would not take a trade right here, right? We're going to be looking for like a trade like right here. Like now we'd be looking for a short. Now we'd be looking for a short. We do not look for a short down here. This is a no-go. This is a no-go. What we want to see is we want to see it close to the rolling VWAP and or the normal VWAP, but below or above both of them at the same time. So for example, we come up above the rolling VWAP and then we also break above normal VWAP. So now a potential trade you could take is you could take the retest. So you could see this as a retest. You could see this as a retest. We do not enter up here. We do not enter up here. These are both no-goes. We enter down here. These are the general kind of trades that you should be looking for in the market. And I'm going to go ahead and show you a couple of examples so that you further understand what I'm talking about in a more realistic circumstance. Okay, so here we are on a 5-minute chart in a more realistic circumstance. Okay, so here we are at 9:05 Eastern time in the morning. So we have 5-minute candles until we hit that 9:30 daily market open. Okay, so now let's move ahead. So we're going to go ahead. Let's see. So right now we are above the rolling VWAP and we're also above VWAP. VWAP is pretty far from the rolling VWAP, so that is one thing that I would caution you of. But right now we're looking for a long position. So it's 9:25 and it's right before open, but you know, we're right at the rolling VWAP. Let's try a trade. So what I like to do is, it depends on what ticker or trading instrument you're using. I'm currently showing you this on MNQ, also known as the NASDAQ. This could also be known as QQQ if you're trading an ETF. So what I'm going to do is I'm going to pull out my long position. I'm going to put this sucker right here, and generally I like to do like 50-point stops and 50-point take profits, and I just do like a 1-to-1. You can hold for longer if that's your trading strategy, but this is just generally what I do with the strategy, and it works like a charm if you trade this and you're very patient and diligent with following the strategy correctly. So here we are, I'm entering a long, so let's see how this plays out. And that would have taken the profit target before it ended up cutting through and killing us on this massive candle, but we should have made our take profit before this happened. So now we are below the VWAP. Let's see what happens. So this candle kind of retest the VWAP. Maybe in real time, you might take this trade because we broke and closed below the VWAP and we're below the rolling VWAP. Maybe you take the little retest. We're just going to call it a lost trade. Okay, so now we're going to fast forward a little bit. So now we are retesting right here. We're hitting the VWAP and the rolling VWAP on the 5-minute. So this is probably where I would take a short. And just to be more realistic with it, probably going to take it like a little bit below the VWAP because we don't want to miss the trade. We're going to do a 50-point stop and we're going to do a 50-point take profit, and let's see what happens. Okay, so we just barely would have not been stopped out and our take profit hit. So that would have been another winning trade. So it looks like we could have entered again and we would have been fine as well, but hopefully you're kind of seeing what I'm talking about. So if this comes back up again, I might try it again. Yeah, so let's try another short position. So another short position. Let's see how this one rolls. Okay, that would have been a stop. We would have gotten stopped out on that. So that would have been a loser. Would have eventually played out, but it's okay. So we're up on the day still with 2 winners and 1 loser. So let's go short again just for the hell of it, because it's following our strategy. So let's see what happens here. Oh, and there's another winner. So as you can see, if you follow this strategy, pretty solid. And I probably wouldn't actually take this last trade just because it had already tested it twice so close. Like if you look at the time frame, our last trade before this fourth trade, the third trade was at 11:25 or 11:20, and this trade we ended up taking the trade at like 11:55, so it was only like a half hour later. Generally speaking, that happens, the probability isn't as high, so you don't want to take it on like third and fourth retest of the day. I would probably rather wait for it to go above the rolling VWAP and the VWAP and then take a long position on the retest. So if you can manage to do that, you should be golden when you're trading with this strategy. Just be sure to be patient and only take trades when you're close to the rolling VWAP and the VWAP, and feel free to play with the risk management on this. But me personally, I just go 1-to-1 and I trade on the NASDAQ, specifically MNQ, because I use micros, not mini contracts. And I've had great success with this. This has been profitable for me for months. So please let me know what you guys think down in the comment section below. And be sure to hit that like button and subscribe for the algo. Thanks guys. See you in the next one.